The next strategy we're going to be talking about today is Roth IRA conversions. We like the Roth IRA a lot, and with the recent changes to the tax laws, the Tax and Jobs Cut of 2017, they actually lowered 5 of the 7 buckets. It gives an opportunity, and the reason why we like the Roth IRA, because they give you tax-free retirement income and tax-free inheritance. If we transition to the next slide, we'll talk about the Secure Act and what that means for the Roth IRA conversions. The Secure Act passed at the end of 2019, moved the required distribution age up to 72 years old. Before the Secure Act, our RMD age was 70, as many of you know. But the other thing it has done is it effectively eliminated the stretch IRA. Now, what stretch IRA is if you are a non-spousal beneficiary of an IRA, so a son, daughter, and you inherited the IRA from your parents, you could stretch that IRA over your lifetime. So if you inherited an IRA when you're 40 years old, you could stretch that over the next 40 or 50 years and create a pension-like income stream for yourself. What the Secure Act said is, okay, now instead of stretching over your lifetime, you have to take that money out within a 10-year period. So if you inherited, and let's just keep numbers simple, if you inherited $1 million from your parents, or you left $1 million legacy to your children, they would have to take that over 10 years, effectively adding $100,000 to the tax return every year instead of stretching it out over the lifetime. Significant consequences and more of your money going down to Washington, D.C. So one of the things we like about the Roth IRA, and you can do it before you retire or even during retirement if it makes sense, is taking part of your IRA every year and converting it to a Roth IRA. One example I like to use is we have a lot of clients retiring in mid-60s. Now with the Secure Act, you don't have to take assets out of your IRA to age 72. So if you retire at 65 and you don't have to take assets out for 7 years from your IRA, if we transition $10,000 to $20,000 a year from your IRA to a Roth IRA, if you don't need those assets to live your lifestyle, we're now building a tax-free retirement pool of money for either yourself or for your children. The nice thing about that is, again, we pay a little bit of taxes now. When taxes are cheap, we don't know how long taxes will be at these rates for. There's a strong possibility that they'll go up in the future. So we're looking at now saying, okay, taxes are cheap. Let's take a little money out of the IRAs. And again, not take a big distribution, but strategically look at it in your tax return and what makes sense and move money to a Roth IRA to create that pool of tax-free money for you. One other point is the CARES Act that was passed in 2020 because of the coronavirus has eliminated RMDs for the year. So if you don't need to take your RMD, and say you have a $75,000 RMD for the year, it might be a good opportunity to take half of that IRA or half of that RMD and move it to a Roth IRA, creating that tax-free pool for yourself, and also reducing the money that goes on your tax return. You can move the whole money, the whole portion of RMD to a Roth IRA for 2020, but you don't have to. So it's a good opportunity to talk with your planner and see what works best for you and your tax return.